Hey, good afternoon, everybody. Had some pretty muted trade in crude oil today. As we speak, it is a little bit lower, and we're seeing some pressure from a slightly higher dollar, but off the lows because of higher equity trade. And crude's really been able to maintain prices above $80 a barrel, even with plentiful supplies and with weak demand in the picture. And it looks like there's still a lot of talk about possible further quantitative easing. So that's going to be the thing to keep this market friendly and pointing higher. We're going to continue to watch the equity market and watch that as signs of any kind of an economic pullback. If we do see these equities fail at these levels, we'll probably see crude oil come back down to earth as well. And we're going to get some economic data later this week, reports on inflation, retail sales, and consumer confidence that are going to give us some short-term direction. Now here, this is our continuous chart. And as you can see by the very big consolidation formation we've seen, that we did break out to the upside here. And this was on, again, the expectations of further quantitative easing. As you can see, moving to the next slide, this is our December contract, which will be front month by the end of the month. And last week's high failed right at 62% retracement of the move from our highs that we had last May to our lows that were also last May. So this is a very big range that we had for the month of May, and we've been really just chopping around since then. And really the reason that we got short crude oil last week is because since we made this low, we've had numerous days in a row where we've had higher lows. And this day right here was the first trading session that we've seen the previous day's lows violated. So that was the day that we got short, and we're just going to be risking above the highs at this point. And if the market cannot continue to buy into this market based on the idea of further quantitative easing, then we may see this $80 area violated short term and see our profit objective hit. But if this market does go up and make new highs, then we want to be out of that short position. Moving over to the dollar, we've got a very well-defined downward channel here. And until this market really takes out the highs from this day where we put in a key reversal, which is where we opened above the previous session's high and closed below the previous session's low, until we take out the 78.90, we really don't have any interest in buying this dollar index contract unless something fundamentally changes, which would be some kind of a statement from the Federal Reserve on their communique from their meeting. So from a technical standpoint, this market is still in a downtrend, and rally should be sold until this area is violated, and that may be a signal that this market may have put in a short-term bottom.